Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Thursday, May 13th, 2021, and we again find ourselves in the final hour of the trading day. The final hour of the trading day is my preferred time to make the majority of my buying and selling decisions for my swing trades, and I say this because during the day traders and the algorithms, they are the ones that are in control of the price. At the end of the day, in that last hour, and particularly in the last few minutes, the large financial institutions come in, they start taking control away from the day traders and the algorithms, and I consider the closing price of the day the most valid price because the large financial institutions are controlling it and they're dealing with the most money. They have very smart people, best information, best technology, and in the long run, not in the short run, but in the long run, I believe that making my buying and selling decisions based upon the price right before the close is the most valid price in regards to your buying and selling levels. So thank you all for coming today. I hope everyone is having a nice day. A lot of green on the board today after yesterday's shellacking. And boy, split personality. Nobody wanted shares yesterday. Everybody wants shares today. But that is trading. That is the stock market, and that's what we have to deal with, right? So we're just going to do our best. Currently, the Dow is up 560 points, up 1.67%. The NASDAQ is up 124 points, up 0.96%, and the S&P is up 62 points, up 1.54%. So here is the plan for today. First of all, we are going to run the U.S. legal disclaimer. Secondly, we are going to come back. We're going to take a look at my current positions, talk about when I bought them, why I bought them, and how I'm going to manage them going forward. I did have a handful of intraday trades today, day trades, that I will share with you as well. After that, we'll go over to the board, and my students have some of their positions over there. So we are going to go through, take a look at each one, see where they entered, see where they're at, see if they're up, see if they're down. After that, we're going to talk a little bit about trader psychology. Most important skill in trading is the skill of being disciplined and battling your emotions. It's important to learn how to trade. It's important to learn technical analysis, entries, exits, position sizing, all that kind of stuff. Yes, it is. But at the end of the day, you can put together the best plan, but if you don't follow that plan, what use is the good plan, right? So, if you find yourself not being able to follow your plan, you have some work to do, my friend. You have some work to do, whether that's, being contemplative about it, thinking about it, meditating about it, having your wife or your girlfriend, boyfriend, husband, look at your trades, following your trades, so that you have someone to be accountable to. That's a good little trick that works as well. But whatever it is, you need to make it happen, because without the discipline of following your plan, it's very difficult to become a profitable trader. So we'll spend a few minutes there. After that, I have gone down through my watch list. I have gone down through the results of Kamal Scanner. I do have 3 requirements whenever I'm looking to get into any new trade. First, I need a confluence or combination of indicators lining up on multiple time frames. Number 2, I need a good risk to reward ratio, at least 2 to 1. So if I'm risking $1,000 to the downside on a trade, I need to be able to make $2,000 or more to the upside. Number 3, make sure you have a complete trading plan before you enter any trade. Position size for volatility, know where your emergency stop is, know where your end of day stop or your end of bar stop is, know where your profit targets are going to be, know where your overhead resistance levels are going to be, and have a good solid trailing stop plan as well. And then number 4, I guess, I always want to mention this, but everybody, please try to be a little diversified in the positions that you have. You don't want to have 6 tech stocks. It's great if they all go up like today, but if it was like yesterday, you just get hammered. So just a good piece of advice, when you're considering what you're going to buy, consider what you already have. You be great. The ultimate for me is to trade a variety of time frames, trade a variety of strategies, and trade a variety of different industries of stocks, and even get outside of stocks like gold, bonds, metals, things like that. All right, so I do have some end of day candidates. We'll go through those at the end of the day. We'll take into account the 3 requirements I have, go through them with a fine-tooth comb on multiple time frames, see if there's something worthwhile buying. If there is, I will go ahead and purchase it before the close of the day. After the market closes, if anybody has any questions for me, please feel free to let me know. Just go ahead and ask. If you need clarification, go ahead and ask. Say I need some clarification on this or clarification on that. If you have any new entries for me, if my students have any new entries for me, please wait till the end of the day so that the market's closed, I'm done teaching, I'm done trading, and the pressure's off. And then lastly, if you have any stock symbols that you would like to get my opinion on today before the market's closed, put them in the chat and I will do my very best to get to them before the close of the market. Okay, I'll do my very best. So I'm going to go ahead and run that US legal disclaimer and I'll be back in about 40 seconds. Thank you. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right, let's see who is here today. Lova is here. Nice to see you as always, my friend. Dan is here. Good to see you, Dan. Zing is here. Hello. Hello to you as well. Hope you're having a nice day. Thanks for coming and visiting again, Zing. Kamal is here. Good to see you, my friend. Thank you for everything that you do for this channel. I appreciate it. I know everyone else does as well. And thank you as always for your friendship, Kamal. David is here. Hi, Greg and group. Good to see you, David. Hope you are doing well in the family. Steve Burns is here. Good to see you, Steve. Thank you so much for being here every day and contributing what you do and helping out the channel. And it's always an honor and a privilege. And so hope you, Holly, and the dogs are well. Tony is back. Hi, Tony. Good to see you, my friend. Hope you're doing well. We talked a little bit yesterday about Tony maybe sometimes repeating same mistakes if my memory serves. But yeah, that's something we need to work on, Tony. You know, all of us do, right? We're all going to make mistakes, but every once in a while we are going to have to learn from them and not repeat them. That's the key. But good seeing you. Paxton says, hello, everyone. Paxton is listening while he's driving. Tracy is listening here. Sweet. Good to see you, Paxton. Good to see you, Tracy. Drive safe, Packy. Lova says, IRDM tested 200. Now it's in the value zone. Rejected both the 30 RSI and the negative 30 ATR 2 days ago. Held near the 200 SMA during the yesterday's disaster. Weekly is acceptable. Okay, that all sounds good. Okay, this is the 5 minute. Let's check over here. Well, we have a close under, close back over the 200-day moving average. That is correct. We have gone above this previous low over here. The weekly looks pretty good. Rejected the negative, rejected the 50 SMA. Let's see how high it got already today and see if that's a factor. Got to 47.14. Okay, so this is how I look at it. We came so far from here up to here. I don't think I would buy this here. There was a day trade where I had the exact same thought on this and I didn't buy it and it went screaming up. So obviously it could. I think it's a touch chasey. There's a lot of there's been a lot of movement from the low to the high. It's good that we did come back yesterday and come back over. It's okay. It's okay. My gut feeling here though is it might rally another day or two, but I have a feeling it's going to come back. I'd rather get a higher low V1, V2 after coming from such a lower low and having such a strong move up. It's already gone from here to here. If it gets weak, people that bought down here will sell it. I would like to see a test of the 200-day again. But it did yesterday too. But even at that, it seems a little chasey to me here, Lova. So that's my honest opinion. Okay, so we have another one. DT. I like DT better. We came back. We tested the 200-day moving average. Looks like we probably went like Lova says, tested the 30 RSI, high volume green bar yesterday. Yes, we came back on lower volume, rejected the third weekly is in the value zone, rejected the 50-day. I like that one better. The only thing I don't like about it is it's down on an up day, but I definitely like that. Better. Tony would like to look at Walmart. Well, Tony, we had a big move off the lows today. We have the 200-day moving average right here as resistance above us. That, to me, is going to be significant resistance. We've already made a big move up here. There's a lot of profit that people have made, so I could see it sell off a little bit. I don't think I would buy this here. At the very least, I'd wait for a close, like a nice clean close over the 200-day moving average. But this feels chasey to me, especially with this confluence of resistance above us. And then we have earnings coming up on, is that Monday? Let's see. Monday's the 17th. So, yeah, that does not appeal to me, Tony, the way that I trade. Dan says, Steve, the first time I came to these live classrooms and mentoring, I almost fell over when I saw you here. Thank you, Steve Burns, for your teachings. I agree. And by the way, congratulations to Steve and congratulations to Gary by making the good decisions and covering their puts yesterday when things looked really bad. And, enough is enough. And it was a great trade. I think Steve made like 125% on that trade. And I believe Gary somewhere in there as well. But congratulations, Steve and Gary, for that good decision you made by saying enough's enough, taking those profits off the table while you had them. But I agree. I agree, Dan. Sorry, my voice is a little weak today, everybody. So bear with me. Excuse me. Sorry. Frank is here. Good to see you, Frank. Hello, Greg and group. Thank you, Frank, for everything that you do for this channel, my friend. I really appreciate it. I know everyone else does. We love your poems, and you are the master trading poet for sure. Tony said, yep. Johnson says, hi, Greg and everyone. Good to see you, Johnson. Paxton says, hey, Greg. Hey, buddy. Steve says, Apple bounced at the 200 SMA area. Yes, it did. I went long Apple yesterday based upon that. Steve says, VIX was crushed today after getting over the 72 RSI yesterday. Good that me and Gary took our SPY puts exit yesterday. Yeah, I was just mentioning that was a really good call. You had an outsized gain on that. Didn't get greedy about it. And like Dr. Alexander Elder says, when it comes to taking profits, he's just like, when it's enough, it's enough. And I think he's right. Steve says Amazon 200-day acting as resistance. Yep, I've got that on the list. AXON is Kamal. That looks fairly good. I mean, it's a good risk to reward ratio. We've tested the 200-day moving average 3 times. We're testing the negative third ATR channel as resistance. It is up today. Under 30, over 30. That looks pretty good. Let's look at the weekly. Weekly has the 50-day moving average as below. I kind of like that. Steve says, I exited my SPY weekly put option for a 161.16% gain and very glad for it. Yes, that's the one I was talking about yesterday with you and Gary. And I mean, hey, if 100 excuse me, if 161.16% gain isn't enough, then I don't know what is, right? And especially, the readings of the VIX, and we kind of know how the VIX works. Every once in a while it keeps moving up, but generally those big spikes get moved back down. Okay, let's take a look at current positions here. Gary and I have been in this trade for a little bit, but it is on weekly bars, and that is why. These are weekly bars. This was a really nice return to value, sideways motion, what I'm looking for. Nice V2. Here's the 1, 2, 3. 2 washes out 1. 3 closes above 1. False breakout to the downside. Under over 50 SMA. Bought here at 43.96. Moved up nicely. This bar took me out of half because we rejected the 50 RSI, but I did keep the other half, and it has moved up, although it is down this week. But as far as entry to current price, had I not scaled out, keep in mind, right, this is up 12.48%. So that's been a nice little trade so far. All right, in phase, Frank, Paxton, Tracy, and we did buy. I like this setup a lot. False breakout to the downside, V1, rejection of the 250-day moving average, rejection of the negative third ATR channel. But right here about 121.60. Yesterday it held the 200, but today looks like it is losing the 200. So I will have to take a loss on this. It is down 2.19% today. Again, I will take a loss if it closes under the 250-day moving average. If it closes back above, I'll keep it like I did yesterday. PKI. All right, so David and I did take PKI last week on a weekly trade. Bullish engulfing bar, 520 crossover, trigger of a fractal, bought it at 141.02. It's 141.66, so it was down significantly yesterday. Up today, 2.76. Boy, sorry everybody, I'm struggling with my voice here. But anyway, bought at 141.02. It's 140.66. So is up on the day, and it is up on the trade. The SPY, which has whooped me up pretty good the last little while, finally did have a nice overnight trade on the SPY. I bought it yesterday at the close at 405.71, sold it this morning at 407.09 at the open, much higher, but I have to forget about that, right? I'm only looking from the close to the open. So bought at 405.71, sold at 407.09. We'll be buying this today at the close. Just from a charts perspective, we bounced off the 50, but now we're finding resistance at the -1 ATR channel. And then lastly on the list is natural gas. David, Paxton, and I did buy natural gas on the monthly at 10.52 with a higher low V2. Currently it's 10.65. So far this trade is up 1.33%. All right, let's go to, and I also have Apple, but I'm going to show you the day trades first. This was a frustrating trade. I was looking for this deep dip buy. We rejected the 200, closed back over. I bought here at 124.41. Great risk to reward ratio, and initially went up, and then this bar got me out under the 200. It was a very small loss. I got in at 124.41. I got out at 124.33, so 8-cent loss. But I got out. I had to follow my rules. And then we had another close back above the 200-day moving average. I didn't buy that one because it seemed chasey, and I was wrong, right? But that's how it goes. So that one was a small loss. On the bright side, I did buy Apple yesterday with a intraday rejection of the 200 on the swing trade. I bought it at 122.60. It's currently 125.34. It is up 2.1%. I did hit two profits targets today at 124.60 and at 125.33. So this is a nice trade so far. My end of day stop is a 200-day moving average. Okay. On the Qs, also frustrating intraday on the Qs. I took two stabs at the Qs. First here, we had a higher low V2 back above the 50 RSI. I bought this at 320.05. Next bar took me right out, 319.42 for a loss. I took another stab at it here with this V1 rejection of the 100-day moving average. Bought it at 318.85. 2 bars later, I did take half. as a profit at 319.17, but then the next bar closed below halfway, the washout bar. So this was very close to break even, just a slight loss. And then it went away from me, didn't get it, and then it took off. So sometimes that's how it goes. You know, you follow your rules. I followed my rules exactly. It just didn't work out. But I did follow the rules on the VIX earlier in the day. I bought the VIX here, false breakout to the downside, plus a V2. MACD had crossed over. I bought it at 44.14. Next bar moved up nicely. I sold half at 44.43. Next bar moved up again, 44.80. Next bar moved up again, 44.93. At that point, I only had an eighth of a position left. And then when it came back down to my entry point, I got out on that last date. But nice profitable one here, 44.14, out at 44.43, out at 44.80, and out at 44.93. So all in all, very close, slightly positive on day trades today. Hey, give me about 30 seconds. Sorry, I need to grab a drink. My voice, I don't know if I'm going to make it. So let me go grab a drink real quick. I apologize. I'll be right back. Okay, sorry about that, everybody. I went outside last night to do something with the sprinklers, and I got the chills, and I could not wait. I could not warm up. So today, I feel a little rough. So I apologize. All right. Frank has a poem for us. This is going to be good. You know that they always are. And let me put this up here. And let's take a listen. You know these would be better if Frank read them instead of me, right? One, because he wrote them. And two, I'm just sure Frank is a good speaker. All right, here we go. Prepare for the worst, but expect the best. It's time that puts a trader to the test. It's time that puts a trader to the test. With the eye of an eagle, we watch from our nest, knowing trading is not a contest, but a personal quest. Oh my gosh. That's outstanding. Frank, unreal, man. Prepare for the worst, but expect the best. It's time that puts a trader to the test. With the eye of an eagle, we watch from our nest, knowing trading is not a contest, but a personal quest. So good. Can we have a little round of applause for Frank? That's unbelievably wonderful, lovely poem. And so pertinent to trading, just like every single one of his poems are pertinent. It's just great. Frank, thank you. Lilia, hi Lilia. Good to see you. Hope you and the pups are doing well. Hope you're having a good day. Dan says, cool poem. Yeah. Super cool poem. I mean, that's just wonderful. Okay, let's take a little look-see over here and take a look at current positions, everybody. Kamal, AYX, Kamal by AYX at 78.60. It's currently 74.70. It is down 4.44% today, so it is down on the day and it is down on the trade for Kamal. PCAR was bought by David. I like this setup. False breakout to the downside, bullish engulfing bar, V1, bought at 94.51. It's 94.77. It is up on the day, I believe. Yes, it is up nicely, up 3% on the day, and it is also up on the trade. ELY is Frank. Frank has had a fantastic trade back here on Callaway Golf at 27.75. Look at this beauty. I think Frank sold half there, or maybe it was, no, it was here. It was yesterday, but up 2.95% today. And so far, this trade up 14.53%. That is pretty sweet. Uber is up today. I haven't seen Uber up for a while. Gary bought Uber, looks like at 48.20. It's currently 44.65. It is up today. It is holding the 250-day moving average, but it looks like it's down on the trade. IONS, Tracy and Paxton bought IONS at 37.34. It is 37.34. So it is up today, and it's exactly even on the trade. Came off of its lows. Good to see that. And lastly, Vroom. I don't have anybody in Vroom, right? No. I don't even know why that's up there. Okay. What a monster day after yesterday's just shellacking. Unreal. Unreal. All right, so listen, before we start looking for end-of-day trades, I like to talk about trader psychology. There's some really good Facebook and Twitter channels out there that I read their posts every day, and if I find something that I like and I think is helpful for me and helpful for you, I like to share it during this podcast. This is from Trading Composure, at Trading Composure on Twitter. Great channel, everybody. I would seriously recommend that you subscribe to his channel. He is a real expert when it comes to trading psychology, getting into the real nitty-gritty of it, and you can tell Trading Composure really understands it from his posts. So subscribe, read his post every day, internalize it, and I think you'll be better off for it. But I like this post because this is something that we don't talk about a lot. Some argue that it's far better to, Some argue that it's far better to risk small, keep your equity swings manageable, and strive for a sense of balance each day. Others argue that more risk could allow you to retire early if it all works out. That's the thing with risk management. It's deeply personal. And it's so true. So this first one, some argue that it's far better to risk small, keep your equity swings manageable, and strive for a sense of balance each day. That's me. I definitely strive for a sense of balance each day. I like to keep my risks small. I like to keep my equity swings manageable because for me personally, if my equity swings swing too big, too wide, that tends to destabilize me and tends to have an effect on making good decisions. And I know that about myself. And so that is why I structure my trading and my risk around, having smaller drawdowns, because smaller drawdowns allow me to keep focused and mentally calm and balanced, and I make the best decisions when I do that. Now, someone else might say, no, risk, and if it, like he says, if it works out, you could retire early. I think the key word there is if, right? But people all have different personalities. Some people are more willing and are more adaptable to having big, large swings. When I was a younger trader, I had big, large swings. I know Steve Burns did as well. But as I got older, more conservative, I just switched my approach because it felt more comfortable to me. There are pluses and minuses to everything. It depends probably on your age. It depends what your goals are. It depends in a great deal. It depends in a big way how much money you're dealing with as well. If you're dealing with a small amount of money, okay, maybe you can stomach those bigger swings and swing for the fences. But if you're dealing with larger accounts, most professionals that are dealing with large accounts, they tend to be, I believe, in this first category with keeping your equity swings manageable, strive for a sense of balance. So anyway, think about that. Take into consideration the factors, how old you are, what your goals are, how soon you're going to be retiring, how much you really need the money, right? Those are the kind of things that you need to think about. But I prefer this first one, risking small, keeping your equity swings manageable, and strive for a sense of balance each day. So that's what resonates with me the most. But maybe the second one, where you're risking more and possibly allowing you to retire early if it works out, maybe that appeals to you as well. But like Trading Composure says, it's deeply personal, and there's pluses and minuses to everything. So thank you, Trading Composure. Appreciate that. Appreciate all your great posts. They always help me, and I hope it helped people today in this podcast. All right. So let me take one more quick look over here at my positions. All right, so AGQ up 0.94%. That's a weekly trade, doing fine. I'll see if I have to make a decision tomorrow. ENPH, it looks like I will be getting rid of ENPH today at the close if it closes under the 250. So let me put a little blue box up here to remind myself that that one's on the cutting board. PKI up 2.82% today. This is a weekly trade, but it's doing just great. I'm not going to have to do anything with that. Looks like SPY is making a high on the day. Wow. Of course, I will be buying this today at the close. And then holding it overnight, selling it first thing the next morning. And then UNG is down 3 cents. That's a monthly trade. I really don't have to worry about that currently until the end of the month. All right. Steve says wild equity swings and blowups can risk mental ruin as well as financial ruin. Yeah, it's 100% true. I mean, that is why Steve and I tend to be more conservative, smaller risks, smaller swings, because of the effect it can have on your mental state of being. It can destabilize you, and you can be a great trader, but if you get destabilized during certain parts of the year, it can really be costly. So, my first goal is 1, to manage risk, and 2, to keep myself mentally stable and balanced so that I always make good decisions. And I believe Steve is very much like that as well. All right. Steve says a lot of individual tech growth stock names being crushed today, even as the index rallies. Yep. So the indexes are the ones that are getting the money, but yeah, a lot of the individual tech ones are being crushed today. So it's kind of a stock picker's market at this point. And I think people, when they're looking at stock picking markets, a lot of them feel more comfortable just by the index. All right, well, let's start out here. Bitcoin has gotten hammered, everybody, down 9.65% today, consolidated in the value zone. Consolidation leads to big moves down or big moves up. Just don't know which way, but this time it was to the downside. On a plus side, we do have a double bottom here with the bullish divergence. Here's a low, deep red MACD bars indicating strong momentum to the downside. We rallied into green. Now we have come back. We have tested that low. The depth of the MACD bars not very deep, with the indication that this second move down, the momentum was not as strong as this first move down. And that could possibly indicate that we are running out of sellers and the selling momentum is waning or lessening. And the implication there is that we might possibly go up from here. Maybe, right? You still need a trigger. Was this an under 30, over 30? We're at 37. Got to 34. So no. For me, not a trigger, but if you are Bitcoiners out there, you could use that 100-day moving average as your end of day stop. That does give a good risk to reward ratio, but a big move down, which concerns me. All right, AXON. Looked at this earlier. Rejection of yesterday's low, 3 times tested the 200-day moving average. This all looks pretty good. We are now back above the negative third ATR channel, which adds a few bonus points to it. On the weekly, we have caught support at the 50-week EMA here. So, it's okay. It's a good risk to reward ratio. It's not too bad. I have this down as one of my potentials for the end of the day. VMW. All right. Well, we have a false breakout to the downside. Yesterday's bar went below. Today, we have a V2. We have a 520 crossover. We have an under 50 over 50. This is also pretty good. If we look at the weekly is holding the 5 EMA, which is positive. This one's okay as well. Don't like the volume that happened here today. Not a whole lot of volume, 597,000 shares, but that one is a potential. Amazon, we talked about this. We're stuck right in the middle here of significant resistance above us and significant support below us. If in the coming days, if Amazon were to close above the 200-day, I would consider buying that. Alternatively, if it moves down and it had a nice rejection with a good risk to reward ratio of the 250, I would also consider buying it there. I would prefer that, to be honest with you. I would prefer to have, excuse me, everybody, sorry, right there in that area, maybe about 50 points lower. So nothing on Amazon for me yet today. Tesla. So plus and minus here. The plus is we went under the 30 RSI and over the 30 RSI. We're at 3017, so clearly we were lower than 3019 earlier in the day. On the negative side, we lost the 200-day moving average, and Tesla is down almost 3% on a big, strong up day. So with that being said, I am not interested in Tesla. What I'd really like to see is a rejection of this 250-day moving average down here. That I would feel better about a good risk to reward ratio down there. If we look at the weekly, we have the 50-week moving average down here about 524. That would also, right about here. Yeah, so then you'd have a confluence. You'd have a confluence of the 50-week moving average and close to the confluence of the 250 on the daily. That makes the most sense to me. So not interested in Tesla today. REGI, Renewable Energy Group, under 200, over 200. Could be okay. Not familiar with this stock. On the weekly, it's holding the 50 on the weekly. It is up nice today. Not too bad. Not too bad. I still think I like some of those other ones better. But that does look good. Let me take a look at it one more time. Yeah, the only thing I see is that big down bar, and halfway of that's going to be about right there. Has a little bit more room to move, it looks like, but yeah, it is a good confluence. It's a nice confluence on the weekly and on the daily. But yeah, you could buy that with a close below, with your stop being a close below the 250-day moving average. And MACD is green, which is also nice. Lemonade having a huge day here. A little bit of a V1, not a great V1. Looks like it went under 30, over 30. The one thing that concerns me here is this third ATR, negative third ATR channel overhead as resistance. On the weekly, it's holding the negative 1 ATR channel. I just think it's chasey, but Lemonade's one of those stocks that can just keep on going. But I think I'm going to pass on Lemonade. Workday bounce at the 250-day moving average, also was rejected at the 200-day moving average. So some positives and negatives on that particular stock for me, holding the 50-day moving average on the weekly. Very similar to Amazon, actually. Caught between the 200 above and the 250 below. TLND, false breakouts to the downside in the V1. Not too many shares traded, only 225,000, and too high for me to buy anyway. AMCX, I do not see anything there. NUVA, only 100. I mean, it's not bad. It's a return to value, sideways, 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 false breakout into V2 and under 50, over 50. But there's only 185,000 shares traded, and it looks okay. It actually looks okay. It's just that the number of shares traded is what I don't like. MCK, false breakout to the downside. V1, bullish engulfing bar. 520 crossover. Has the 50-week moving average above it as resistance. Day one's bar is larger than 1 ATR, so I'm going to pass on that. SGEN. Looks like we have a 520 crossover here. I don't know how that back tests. So I'm not going to do anything with SGEN. NTNX, big close under, close back over the 200-day moving average, but at this point it's too chasey. It's too far extended from the 200. PODD, do not see anything here. Tracy and Paxton already have IONS. I think they bought it at the right time. I don't think I'd be buying here. Verizon strong. V1, no sideways motion though, too high for me to buy. And VIRT, so listen, John sent me an email and asked me if I could answer a question today. And so I'm going to do that. And he asked me, he says, you generally don't look too much further than 20 or 30 days away. You can see, I mean, I could, of course, look as far as I wanted in the back, right? But to me, he's right. 20, 30 days of bars are the most useful for me. And one of the things of why that is, I'm trying to find, Bitcoin. Yeah. The reason that I look at 20 or 30 bars, everybody, is pretty much for the reason that I'm looking at double bottoms and bullish divergences. This is a double bottom. Here's a low, rally, another low, less MACD depth here than here. But the best double bottoms and bullish divergences happen when the double bottoms come within 20 or no more than 30 days of each other. So that is the reason why I prefer to look at about 20 or 30 days worth of data and not just huge, big, long bars. So John, if you're out there, I hope that helps, my friend. All right, so AXON looks pretty good. Good risk to reward ratio is up on an up day, which is good. On the weekly, we're holding the 50-week moving average. So that one is definitely a possibility. VMW does look pretty good. False breakout to the downside. V2, if we look over on the weekly. I'm going to pass on this one, everybody, just because we're a little high up there. I mean, it's okay. It's holding the 5 EMA. We still have a gap here, although it's probably more than a quarter of an ATR. So even that would kind of dissuade me for taking this trade. So I'm going to pass on that. Amazon. No, nothing to do with Amazon here. It's still stuck in the middle. So I really don't see anything that I am interested in buying today. But if I did, AXON would be good. And VMW would also be good as well. Johnson says FRPT tested the, okay, let's look. FRPT. Tested the 50 SMA. Yes, it did. V1. Yes, it is, but it's not in the value zone, Johnson. It's below the value zone. Here's the top green line is the top of the value zone. The bottom green line is the bottom of the value zone, and we are currently below it. So we are not quite in the value zone, and that -1 ATR channel is going to act as resistance above it. Hope that makes sense. All right, give me one more second, everybody, so I can get one more drink so I can make it through. Okay, sorry everybody. I'm having a little bit rough go of it today. All right. So, ENPH definitely on the chopping block here, barring some miracle with the close over the 200, but it did it yesterday, so you know, it's possible. Let's see how Apple's doing. Apple's doing great. We have the 50-day moving average above us. Don't think we're going to be challenging that, but we may challenge it tomorrow. That would be good. Dow's up 573 points. So Apple's doing really well. PKI doing really well here as well. SPY near the high of the day. I'm going to buy this at the close. And I think that's about all really that I'm looking at here. Amazon kind of underperforming today, up a little over 0.5%. Look at VIX, like Steve said, VIX has gotten crushed, but that was a big move up. We are holding support right there at the 1 ATR channel. So, you know, we may have not seen all of VIX right now. You know, we may come back into the value zone. We may come right back down, but that was such a strong move up, and a little bit of a move back down makes sense, but it is holding there. It's holding the previous high, which is now support, holding the -1 ATR channel. So I would be surprised if we're just done. I would be surprised if the market just easily goes back up. And that's why I'm being a little conservative today on what I'm picking. So I don't think I'm buying anything today, everybody. I really don't. If I had to buy something, I think the best risk to reward here is AXON. That would be my choice, probably even over VMW. Yeah. Dan says, someone smashed the like button. Thank you, Dan. I always appreciate you looking out for my likes. I really do. Does anyone have any comments or questions or anything I could help them with? Because I think I'm probably not buying anything today. I'm just keeping what I have. I might as well just go ahead and get rid of it. Well, I'll wait. I'll wait on ENPH. Like a good boy, see if we can close back over, but I don't think we're going to. But who knows? But who knows? So Apple's selling off a little bit here on the 5-minute. Frank says the market needs to get back on its meds. That's true. Johnson said, what would be the entry point from Apple from here? Well, I wouldn't buy it here. I wouldn't buy it here right now, Johnson. We have the 50-day moving average above. I would wait for a back test of the 200-day moving average, see if you can get a better risk to reward. Secondly, if it does keep moving up, move up into the value zone, then a pullback and a back test of the -1 ATR channel with the V1 or V2, or alternatively, just be patient, wait for a 520 crossover. I mean, the most likely to me is a back test of the 200 right now. You know, can we get above that 50? I don't know, but there's been a lot of damage done, and you know, I don't want to have like an opinion about it because my opinions always get me in trouble. But, you know, if I just wanted to give the best advice I could, I don't think I would buy it here. I think it's a little risky all the way back down to the 200. I would wait for a pullback with the bounce at the 200-day that just gives you a better risk to reward ratio. That would probably be my best advice from here. Or if it does continue up into the value zone, wait for a pullback, a back test of the 200-day move, of the -1 ATR channel, and then like a V1 or a V2 entry to get you going on the next leg up. So I wouldn't buy it. I'm keeping Apple because I have it and I have a profit in it. So that's different, right? But as far as entering a new position, retest of the 200-day moving average or a higher low V1 in the value zone, or alternatively, a 520 crossover. You're welcome, Samuel. I hope that helped. I don't know if it's exactly what you were looking for, but that's definitely what I would do, my friend. All right, I'm going to go ahead and get out of ENPH and take my loss on ENPH with the close under the 200-day moving average. So I'll just go ahead, sell that, take the loss. And I will be buying the overnight SPY trade. So that will be my only trade today, is the overnight SPY trade. Greg, would you look at where we stand on a SPY 1050 EMA crossover? Sure. $10.50 EMA on the SPY. Well, the 10 is currently above the 50 EMA. The 10 is 414.31 and the 50 EMA is 406.03. So you can see, right, the 10, which is the pink line, is already above the dotted gray line. I'm not holding my breath for a close below the poverty 200-day simple. I'm not holding my breath for a close below the poverty 200-day simple. Well, the 200-day is way, way below us. So that's, I don't think, going to come into play. That's down here about 367. So if I understood correctly, you wanted me to look at the SPY, right? 1050, but the 10 is currently above the 50. So that's not really even close to doing anything there. Is that what you were asking? All right. Okay, done and done there. $43.62. Okay. Sorry, poverty was added by my phone. You know, I think Frank would agree with me that we could rename the 200 as the 200 poverty line. Maybe you'll be in poverty if you close below it. What do you think, Frank? Probably pull that off, right? All right, we have 2 minutes to go. All right, well, things definitely coming off their highs here. Frank says, maybe your phone knows something we don't, Dan. I knew something like that was going to come from Frank. I knew it was going to be clever, cleverly snarky, but nice. Frank says, you know, I would agree to calling it the poverty line. I do know that. Hey, the market's closed. What do you know about that? Okay, everybody. I did not buy anything today, except for the SPY. And let's see where I bought the SPY at. Bought the SPY at 410.28 for the overnight SPY trade. All right. So there was some selling in that last hour. 410.28. There we go. And then I also did exit my trade on ENPH for a loss, so I am out of that. All right, so Listen, if any of my students have any new entries or exits today that you would like me to bring to my attention and for me to update on the board, go ahead, put it in the live stream, and we'll get to that in a second, and I'll get them all updated for you. Just real quick, 3 pieces of business. One, just want to remind everybody that I do teach private one-on-one lessons in the evening time via Skype. I teach a 15-hour course, 5 sessions. Each session is 3 hours. I teach you step by step exactly how to trade all 5 of my different trading approaches. It's a great course. I have been doing this for years now, these one-on-one courses with traders. And I mean, honestly, every single trader that's ever graduated from my course, I know is a better trader. So if I know you will be as well, I work really hard in my courses to teach you the best that I can. It's very important to me that my students succeed in the short term and the long run. So I burn a lot of calories in those lessons to really teach you what I know and make you proficient. So if you are interested in taking the course, it is $1,750. It is a lot of money, but it really is an investment in yourself. And I believe the best way to learn something is to have a mentor or a coach or a teacher, and ideally doing it one-on-one. And that's why I provide these one-on-one lessons for the course. So, if you're interested, my email is in the description of this video. All you have to do, email me in the subject line, say, Greg, I'm interested in doing the one-on-one course with you, or I'd like to know more about it. I'll reply and say, great, let's set up a Skype call. I just want to get to know you better. It's a good time for you to ask me questions about the course. It's a good time for me to ask you questions about why you want to take the course and what you're trying to get out of the course, and talk about your trading and your goals and your trading challenges. And then when we're done with the call, you can think about it as long as you want. And if you decide in the future that you want to contact me back and say, Greg, it's going, then you can do it and we'll get going, and I will do my very best to teach you everything that I know. Okay. Secondly, I do have a course on Udemy. It's an online course on udemy.com. It's very affordable. It's only like $12 or $15. It's a great course. It's 9.5 hours, 26 videos, 15 study guides. And the deep dip buy stock trading approach is one of my favorite ones, and I really like it. And I think the online course really explains it well. So if you're interested in a great course at a great price, the link to udemy.com is also in the description. And then lastly, if you like today's podcast, I would really, really appreciate it if you could hit the thumbs up button. It does help keep the channel around, helps build the channel. So if there's anything of value that you learned today or in the past few days, if you could be so kind, hit that thumbs up button before we get out of here. That's all I ask. And thanks for that. All right. Let's take a look here. Dan says, wow, mind blowing. Kamal says, Steve is going to have a poverty line setup ribbon on TrendSpider. There you go. Yeah, Steve has his own indicators over on TrendSpider with the ribbons, which is great. That would be great. The poverty line setup. Should we just call it the poverty line from now on? Oh, we had a rejection of the poverty line. Let's get in. Again, that's why I took Apple yesterday. Rejection of the poverty line. Good risk to reward ratio. And so far, it's done great. Up 1.79% today. Did anybody have any trades? I'm not sure if anybody did. I had the SPY, but that was it. This could be unprecedented if nobody had a trade today. I don't think we've ever gone one podcast without anyone having a trade. And today might be the day. That's such a good poem, Frank. I'm going to read it one more time. Prepare for the worst, but expect the best. It's time that puts traders to the test. With the eye of an eagle, we watch from our nest, knowing trading is not a contest, but a personal quest. It is a personal quest. Trading affects everything. When you get good at trading and you get the right mindset of trading, you look at everything in life, whether it's trading, business, relationships, you look at everything with an eye with a risk to reward, right? Is there more reward with this compared to the risk? So You know, I know a lot of people just think traders are gamblers and they're shooting from the hip and they're from the Wild West and they're like buy and sell and whatever. But, you know, if you've been on this channel enough, you know that there are a lot of things put into taking a trade. Lots of things that we look at. You know, we're adjusting for things. We have great ratios so that we don't have the risk of ruin. It's methodical, and it makes you methodical in life as well. Kamal says, I like this usage of poverty line, Greg. Yes, there we go. We rejected the poverty line on Apple. Amazon, we still have to get above the poverty line here, or we have to reject the other poverty line below. Kamal is out of AYX. Okay, I knew we were going to have something there. All right. Frank is out of ENPH 25%. Frank, you're out of the quarter that you have left, right? Because I have you here to quarter. Is that what you mean? That you're out of the last quarter at 119. Yeah, I'm pretty sure. Paxton and Tracy, are you guys out there on ENPH? I'm not going to assume that you're out of it, so unless I hear from you, I will keep you in here. All right. So where did we end up? Dow ended up a respectable 433 points, up on 1.92%. The NASDAQ ended up only down, ended up only 93.31, 0.72%, but of course we were much higher. And the S&P ended up 49.46, up 1.22%. Let's take a look. I mean, you know, those numbers don't mean anything, but let's look at it in context. Okay, let's look at the SPY. I mean, look, we had a huge down, 3 days down. Boom, boom, boom. Remember I was talking about the double tops with the bearish divergences? Here's a high, strong MACD, pull back to red, made a higher high. There were no green whatsoever. Double top, bearish divergence, bearish, and boy, did it live up to its name. So look, we've had a big down, we've had 3 days big. We did bounce at the 50. But we did, is this a dead cat bounce? You know, you drop a ball, it drops out of a window, hits the bottom, does bounce a little bit before it goes back down. Is that the case here? Hard to say. Let's look at the RSI on the SPY and see how high we got. We got about, look at that. Does that surprise anybody that we went right to the 50 and failed? We went down here. Yesterday, we closed at a 41.30. Today, we literally got up. Here's my little what if tool. You go to the top there, got right to 50 RSI, 50.14, and it failed. So that 50 RSI is definitely some resistance there. I just don't think we're going to go back up. I just don't think we're going to power through this whole move down and just easily go back up like nothing happened. That's my take. But I'm not making any trades or investing any money based upon that. That's just my own personal opinion. I could be completely wrong, but it is interesting how we got right to the 50 RSI and failed today. Most likely, maybe we go up another day, test it again. Maybe we go back down, test the 50, but I just don't see going right back up to new highs. I just don't see it. Anybody have any thoughts on that? Kamal says 250 could be the bankruptcy line. There you go. Nice. Jonathan, good to see you, bud. Hope you're having a good evening. Lova says, I love the trades I've been taking using your rules. Fantastic. Proud of you, Lova. Really. I'm going to hire you one day, Lova, just to sit back and go through charts for me all day long. You can send me a little memo 15 minutes before the podcast starts, and because I know the ones that you pick make sense. I have faith that the potential setups that you would send me make sense. I could just sit back and watch The Price is Right and eat popcorn. It'd be awesome. The so we have the poverty line on Amazon, which is the 200. We have the bankruptcy line. So we're right between poverty and bankruptcy on Amazon. My preferred entry on Amazon would be a rejection of the bankruptcy line. Frank says, to be honest, I think of stocks under the poverty line like stocks under $5. Yeah. Yeah, just because it's under the 200 doesn't mean it can't ever be a good buy, right? Especially on a big, large monster stock. But, one, you could be at the 250-day moving average. I still respect the 250-day moving average, even if it's under the 200 or the poverty line. But look, I will take entries under the 200-day moving average on good big stocks. If you have an under 30, over 30, like in conjunction with a double bottom and a bullish divergence. So there are times and places where I will buy under for sure. Kamal says, thanks, Greg. Have a good day. Thank you, buddy. Lova says, sounds very good. Okay, we should talk about that one day. Lova. So listen, before I let you go, let's read this real quick. If we all do one random act of kindness daily, we just might set the world in the right direction. This is by Martin Kornfeld. And it's so true. Everybody, is it that hard to go out and just try to be nice and pleasant to at least one person today? It may restore their faith in humankind if you do that. It may do something crazy. Who knows? But it's just a good policy. Let's go out, do something nice for another human being today. Let's go out. Also try to do one nice thing for an animal today. You don't have to give them a T-bone steak, but, you can just give them a little attention, scratch them on the nose, pat them on the butt. If you have a little treat, great, give them a little treat. But just a nice, kind voice. Animals appreciate that as well, just like humans, right? And maybe one day somebody will be out there doing it for you as well if you need it, and you will be appreciative of that. So thank you, Martin Kornfeld, for that. David says, thanks, Greg, and happy rest of the day for everyone. Thank you, David. Miss talking to you, my friend, really do. I always miss talking with my students, because I spend so much time with them, 15, 18 hours, and they get to be like friends and you really get to know them. And I mean, when's the last time you sat down and really talked to someone for 3 hours on a regular basis, right? And that's kind of what happens with, when I teach. And so I'm glad that, my past students come into the podcast here. We can stay in touch and so forth and so on. But thank you, David. Appreciate that, bud. All right. Anything going on after hours? Let's check it out. VIX up 20 cents. Okay, so the SPY's probably down. Yes, it is. 9 cents. Apple's down. Amazon's down. SPY down a little. Just a little. Okay. Well, I'm going to rest the rest of the day. I'm beat. I am beat, but grateful for a good day today. I hope you are as well. I hope you have a good rest of your day. Be good, be kind, drive safe, all that good stuff. Do some deep breathing, study your charts, and have some fun as well, right? Johnson says Disney down 3% after earnings. Wow. Well, thank you for reminding me or telling me about that, Johnson. Just a good indicator or a good opportunity. Now it's down 4%, right? So that's why I do not hold through earnings. I mean, obviously, if you're a long-term investor, you're going to do that. Sometimes it's going to work out. Sometimes it's not. But, if you're a trader, your number one your number one job is to manage risk, not put yourself in harm's way. And the biggest and best way to put yourself in harm's way is to buy and hold through earnings. And that's very likely what it's affecting the SPY here. And then of course we have the VIX, right? So we have the VIX up up 16 cents. So not that big of a deal, but all right. Well, listen, tomorrow is Friday. Been an interesting week. I hope everyone stayed safe, keeping your wits together about you. So have a good rest of your day, everybody. And on the way out here, I'm going to run the U.S. legal disclaimer. And if you haven't hit the thumbs up button, I would really appreciate that if you're still around and within reach of your mouse. That would be great. All right. Thanks a lot, everybody. Take care. We'll see you later. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.